So this new currency that they're talking about, yeah, it's a good idea to have an alternative. But look, the Russians, the Chinese, the Indians, the Iranians, the Brazilians, there's no reason for them to trust each other. Having a common currency actually doesn't make realistic sense. They already have one. It's called gold. So you don't need 40% gold backing, 100% gold backing, and you don't need a currency. You just need the metal itself. That's all. That's the way it was before the last depression.
Gold is becoming increasingly favored by central banks, especially as the dollar's dominance faces scrutiny. DougCasey, a prominent investor and libertarian author, highlights that many central banks, notably in Asia, are adding to their gold reserves. Gold, he points out, is a trusted asset independent of the mutual trust that fiat currencies require, making it a valuable alternative in times of economic uncertainty. According to the World Gold Council, central banks increased their gold reserves by 186 tons in Q3 2024, an 8% decline from the previous quarter. The Reserve Bank of India added 13 tons during this period. So far in 2024, central banks have netted 694 tons of gold, slightly below last year's record, but similar to 2022 levels. A DougCasey survey indicates that 29% of central banks plan to add to their gold reserves within the next year, the highest since 2018. Over the past year, global central bank gold reserves have risen by 909 tons, exceeding historical averages. The strategic pivot to gold parallels ongoing de-dollarization efforts by countries within the BRICS alliance. JP Morgan reports that BRICS countries have successfully moved away from using the US dollar in many commodity transactions, replacing it with local currencies in energy trade and other sectors. This shift, which began in 2022, is part of a broader initiative to reduce dependence on the dollar. Casey suggests that this trend reflects rising concerns about the dollar's stability and reliability in international trade. The dollar's declining value and the potential for political interference by the US government have led some nations to explore alternatives. For example, when Russia faced international sanctions, it lost access to US-based assets, a risk other countries are now keen to avoid. By diversifying with gold and sometimes adopting local currencies for trade, countries aim to secure greater financial autonomy. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
People realize that the dollar is a floating abstraction. It's the on-back liability of a bankrupt government. So they want to dump it. They don't want to use it. They don't want to trade between each other where everything clears through New York and put themselves at the discretion of the US government. Look what happened to the Russians. I mean, they lost hundreds of billions of assets just because Washington decided that, yeah, we want it, so we'll take it from you. So, yeah, it's a good idea that they're getting away from the dollar. I mean, the dollar has been the major export of the US for the last 40 years. It hasn't been Boeings, it hasn't been wheat, it's been dollars, trillions and trillions of them. I don't know how many, they don't know either. $30 trillion are outside the US, and they're hot potatoes because nobody has to hold them. They're just convenient for the moment. So this new currency that they're talking about, yeah, it's a good idea to have an alternative. But look, the Russians, the Chinese, the Indians, the Iranians, the Brazilians, there's no reason for them to trust each other. Having a common currency actually doesn't make realistic sense. They already have one. It's called gold. So you don't need 40% gold backing, 100% gold backing, and you don't need a currency. You just need the metal itself. That's all. That's the way it was before the last depression, except it wasn't. It was fractional reserve. That was the problem. It wasn't 100% reserve. It was 40% or whatever the numbers were. They were dishonest. So you can't have fractional reserve any place, in a currency or in banking or anything. But it's a good idea. They're going to go to gold is the answer to the question, because they don't trust each other. And that's why they've all been buying gold. And the public isn't involved in gold yet. It's mostly these central banks that are trying to dump each other's fiat funny money, and they're buying gold. What else are they going to buy that they can use as a money? I mean, you can't use wheat as a money, can't use artwork as a money, can't use lead as a money. Nobody can store that much of it. That's why gold has always been used as money. It's uniquely suited and well qualified for use as a money. Well, I think they'll continue buying it, quite frankly, and all through Eastern Asia. Well, not everywhere, but certainly in China and Thailand and and India, there are gold stars everywhere. I haven't been to China for some years, but it amazed me. There are gold stores everywhere in Beijing and Shanghai. The average Chinese guy is very used to accumulating gold, and that's still true today in Southeast Asia. I mean, they don't want to hold some paper money that can be crumpled up and dry, and they all buy gold. Their savings are in gold, which is very intelligent, unlike North Americans who don't do that. They hold paper, which is bad enough, and it's in banks, which is even worse, because I don't know what's going to happen to these banks. I mean, most of them are bankrupt, frankly. And of course, if the government bails them out, it can only do that by creating lots and lots more fiat monies. They're in a death spiral at this point in North America, in addition to the fact that the political leadership in both countries is criminally bad.
Gold prices showed resilience in early trading Monday, with a modest recovery continuing a longer-term upward trend. However, this week presents several potential challenges for gold, with two key events standing out: the upcoming U.S. elections and a Federal Reserve meeting. Both factors could significantly impact market sentiment and the trajectory of gold prices, particularly in the context of broader economic concerns. From a technical analysis perspective, the $2,700 mark is emerging as critical to watch. This round, psychologically significant price has acted as a support level in recent weeks, and many analysts suggest it could continue to do so. This level could prove pivotal if the market encounters increased volatility amid shifting investor sentiment over the week. Investor and author DougCasey argues that the sustained rise in gold prices reflects deeper economic instabilities rather than mere fluctuations in market trends. He points out that inflation and government intervention have progressively eroded the currency's value since the dollar was decoupled from gold in the 1970s. According to Casey, this devaluation is a symptom of broader economic malaise, referred to as the Greater Depression, a period marked by declining purchasing power, rising national debt, and financial uncertainty. Let's get back to the interview.
I've been buying gold since about $45 an ounce, back when I didn't have any money, but $45 was worth a lot more then than it is now. And I've never sold an ounce, so I've got a bunch of it. So yeah, I'm happy about what's happening with gold. I'm not happy about the reasons why it's going up. Basically, I've been saying for years that we are entered upon something called the Greater Depression. And forget about what the government says about 2 quarters of down statistics mean you're in a recession. They never define the word depression. I'll give you a definition of the word depression. It's a period of time when most people's standard of living drops significantly. And the fact is that the average North American standard of living has been dropping in many ways, not always, in real terms, since the early 1970s, when the dollar was cut loose from gold. And, the whole world, but especially North America, is built on a pyramid of debt, phony money printed by the central banks, and it's going to end badly. So what's the nature of this depression, the Greater Depression? It's not going to be like the one from 1929 to 1946. It's going to be longer lasting, it's going to be different, and much more unpleasant. So that kind of sums it up. Starting in the early 70s, when the dollar was cut loose from gold totally, and that's when inflation has been getting out of control. The government has gotten bigger and bigger and bigger. I mean, look, most people are unaware of the fact that only 100 years ago, 110 years before World War I, the U.S. government lived entirely on import duties and excise taxes. Very little else. It was a very prosperous and very free time when the government only absorbed a few percent of the GNP. Now, and you can't believe the numbers really, they're all fudged and very complicated. It probably takes about 40% or more of the GNP, misallocates it, dissipates it. So to answer the question, the standard of living of the average person in the world goes up for 2 reasons. Number one, the average guy produces and he consumes, but he produces more than he consumes and he saves the difference. That builds capital. Standard of living goes up as you build capital. Second thing is technology keeps building upon itself at the rate of Moore's law. So those 2 things together have made things better. Meanwhile, state intervention has been making things worse. And I think we're in for a real catastrophe, despite those two long-term things, which will make the world better over the very long term. Over the short term, the next 5 or 10 or 15 or 20 years, and that's barring World War III, which is quite possibly on the horizon as well, we're in for some tough times. And I've been saying that for years.
Central banks' increased interest in gold signals a strategic move toward stability amid growing concerns about the US dollar's reliability. This trend, particularly evident in Asia and the BRICS nations, reflects a broader shift as countries seek alternatives that provide autonomy from potential geopolitical risks associated with dollar-denominated assets. With gold's enduring appeal as a hedge against currency devaluation and economic turbulence, this approach highlights its role as a cornerstone of financial independence. As events like U.S. elections and Federal Reserve policies unfold, gold's position as a resilient store of value may strengthen, especially if economic uncertainties persist. How do you see central banks' ongoing shift toward gold impacting global currency dynamics in the long term? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.